A bold new move from Washington is sending shockwaves through the global copper market. President Trump has imposed a steep 50% tariff on semi-finished copper products, though refined copper and raw materials are off the hook for now. But the bigger story may lie thousands of miles away, in China. As the world's largest copper consumer, China is watching these changes closely. Could this push Beijing to rethink supply routes or retaliate? And what does this all mean for a market already jittery from slowing Chinese growth and collapsing scrap flows? I'm Johanna Bota, and here to break it all down for us is StoneX's Senior Metals Analyst, Natalie Scott-Gray. Welcome, Natalie. Nice to have you with us.
Pleasure to be here.
So let's dive right in, because I know you've had a busy last week. What are the short-term and the long-term implications of these new U.S. copper tariffs on global copper prices?
So the short-term implications, I think we've already basically seen. So the market was really rocked on Wednesday, the 30th of July, so 2 days before this 1st of August deadline, where we expected Trump to outline the ruling of the investigation on the imports. He came out 2 days early, stating that they would be at 50% for the imports, but it's not going to be on refined material, which is the largest imports that go into the US. It's only on the semi-manufactured copper and then the copper-intensive derivative products. So the market wasn't at all expecting that to happen. They thought it was going to be the same as what happened with aluminium and steel, so covering the refined side. So the initial market response was an absolute collapse in the US COMEX copper prices. So we had an intraday decline, falling 22% straight after that announcement on Wednesday, so when the markets were closed in London. Since that period, or actually just a few days before, the 23rd of July, we had a nominal high in US copper prices. So from there to where we are now, copper prices for COMEX are down 20%. They're around the level that we saw in early April. LME copper prices have fallen, but much more modestly. So they're only down about 1%, trading this morning around the level we saw at the end of May. But that spread between COMEX and LME has just completely evaporated. So that's the short-term impact we've seen. And then longer term, if we look at COMEX and then we look at LME, it's two different chains of thought. So for the US copper prices, we expect headwinds in the near to the medium term, and then a little bit of support coming into the longer term. Now, the reason why we say that is we assume about 800,000 tons of copper has gone into the US over the first 6 to 7 months of this year. Now, some of this material is going to be re-exported, but it's going to take time, number one. Of course, it's going to depend on how expensive it is to reship this material out. And it's going to depend on what demand is outside of the US, which overall is actually, fairly lukewarm this year. So quite a lot of that material is going to stay in the US. That's going to have a negative headwind for those domestic prices. And depending on the health of the US economy over the next year, it could take anywhere between 4 months, even all the way out to 12 months for that stockpile really to be absorbed by the domestic market. Now, the reason why we see support slightly longer term for COMEX prices is because in the proclamation that the White House released, they said that they recommend, so not necessarily it's going to happen, but they recommend that there could be phased tariffs coming in on refined copper. 2027, 15% they're talking about, and then up to 30% in 2028. So when we're looking at that time frame, those supply risks of imported refined material could start to arise again, because it's going to take a long time for domestic production in the US actually to increase, definitely not in that time frame. So with the US importing 44% of refined material for consumption, even if there's a little bit of a reduction in that level, those supply risks are going to elevate COMEX copper prices in that longer term. LME copper prices, completely different picture here. So we really see LME prices, or LME copper itself, returning to being Dr. Copper, or having its Dr. Copper status, where it will reflect the health of the global industrial markets. We also think that there'll be a sharp refocusing in on its underlying fundamentals once trade flows start to return to normal. So instead of the material having gone into the US, it will start going back to its biggest market, which is China, start flowing east, and the very serious depletion that we had in LME stocks will start to recover. So with that said, in the macro outlook for LME copper prices, if Dr. Copper does return, we still see it tilting slightly bearish. We say this because not only has the path and pace of monetary policy been delayed, so that delays the cyclical demand recovery that we have, particularly in the Western markets or in the US, but the health of China is a massive question mark at the moment as well. And we see a risk of an escalation in geopolitical tensions as highly likely. Of course, there are so many unknowns, and that really does hold a net negative impact on copper prices. So the macro is tilting slightly bearish for copper prices. The underlying fundamentals, we're seeing a relatively balanced market for copper this year. The consumption ratio, which is all global stocks divided by demand, similar levels to last year as well. So with that in mind, we do think that copper prices largely can take its cue from the macro picture, which we said is tilted slightly bearish. But we also then have to think about the role of investors, and copper likely is always going to have interest from investors on the horizon because it's got a very long-term structural bullish theme where we've got looming supply deficit coming in about 2028 versus very fast growth in digital applications and green applications as well.
Well, here's $1 million question then. What is China likely to, or how is China likely to respond or adapt to these changes?
I mean, it's a very good question and a potentially dangerous one to ask because we just don't know. I think with respect to the copper tariffs, though, it's unlikely they're going to retaliate just to that. The reason why I say that is because the US market for that semi-manufactured material or those copper products is actually very small. So China absorbs the majority of what it produces and then it exports closer to home, so, to Southeast Asian markets. So the impact isn't too severe just on those copper tariffs at the moment on the Chinese market. But I think if you put it into the context more globally between the relationships between these two powerhouses, it's just another headwind. So from the 1st of August, we know that Trump put many reciprocal tariffs back in play. He's made different trade deals. But China is one of the only countries that the US does not have a trade deal with. So yes, they agreed to another 90-day truce, but that's just kind of kicking the can down the road. And China has 55% tariffs on it from the US in total at the moment. And we see that as negatively impacting exports as it stands already, actually still about 70% of exports. Now, the US market accounted for 15% of China's total export market. So here, we're seeing a direct negative impact or loss to 10 to 11% of those exports from China that we had last year, just at this 55% level. So, the relationship is still very fraught, and we just don't know if a trade deal will be done after 3 months. It's probably highly unlikely. So we have to continue to watch this space.
Yes, let's stay with China. The US is also now requiring 25% of its high quality copper scrap to be sold domestically. Mm-hmm. What does this mean for China's supply chain? And also, what does this mean for Chinese manufacturing and the broader copper market as we go forward?
So this was something that we definitely noted in the proclamation when it came out. The background here is that the US was the largest importer of copper scrap into China last year. It was 20%, so a fifth, accounting for about 440,000 tons of copper scrap going into China. So it is a significant portion. So the limitation on 25% of scrap coming out of the US, it is something to note, but it's not as maybe serious as headlines have suggested because one, the majority of material can still be exported of the scrap out of the US. But secondly, I think the market has somewhat priced it in because trade flows from the US into China have already been very negatively impacted. So if we look at June copper scrap exports from the US into China, they fell to below 2,000 tons. And the average monthly level last year was 36,600 tons. So we've already seen this kind of flow or availability of material going into China be limited. There will be a knock-on impact, but I think it's somewhat priced in at the moment.
So then what next steps can China take, do you think?
So I think here maybe in the short term, the first thing that they're going to want to do is see if they can get higher amounts of scrap from other countries importing, particularly in Asia, into the country. The problem with that is it tends to be lower grade, and China want high grade copper scrap really if they can. So I think longer term what they're going to have to try and do is increase investment into their domestic recycling. But we do have the possibility there's going to be lower yields if it's lower quality scrap going into China in the near term.
And one last thing before we let you go, Natalie. China's economy has clearly been slowing down. There's no doubt about it. We've been talking about it. How do you see that impacting copper prices and investor sentiment for the rest of the year?
So the role of China really couldn't be more important when it comes to the future of copper prices. You know, as I've said, we do expect the sharp refocusing on copper's underlying fundamentals now that these tariff risks have really been put aside. And China is the biggest producer and consumer of copper. So it produces 69% of refined copper for the global markets, and it's responsible for 58% of demand. Now, our view for the Chinese market is that we're probably going to have a second year of surplus in 2025 and likely a third year of market surplus in 2026. So if we looked at the demand side, it's quite a mixed picture here. So we have bearish parameters and actually year-on-year declines in demand coming from one of the largest end users, which is construction and the real estate market. You know, we have an ailing property market since 2021. We're still not seeing stabilization there. So we're seeing deepening declines when it comes to property investment. Meanwhile, the trade-in policies and some of the subsidy programs that have gone in at the beginning of this year in China to encourage increased demand for consumer goods has benefited copper demand, but we're concerned there might be a little bit of exhaustion or front-loading having happened in the beginning of the year for that. But we see this really being offset by very fast growth coming from data centers, 5G network build-outs, but that is quite a low base, so we have to just caution that. Meanwhile, substantial growth is going to come from renewable energy, new electric vehicles. We actually expect more than 200,000 tons of copper demand growth year on year just from that sector alone. And the majority of growth which is going to be fairly steady, is going to come from power, from the build out of the national grid. And we do expect tenors actually to accelerate in the second half of the year. So that's underpinning pretty robust growth this year in China. Now, if we look to the supply side, we are on track for another record year of refined output. And if we look at where we are in the first half of the year, just from the statistics that have come in, we know that refined output's actually up 11.2% year on year. And ore imports have been very healthy. They're up 6.1%. So even though refined imports of copper into the country are in negative territory because we've seen so much material go into the US with anticipation of these tariffs, hopefully with this trade reversal, maybe by the end of the year, we'll actually see refined imports return into positive growth. So all of that together is supporting that supply side. Now, there are risks. There's always risks when it comes to looking out to supply. At the moment in the headlines, we can already see there are a host of mine disruptions which are going on. But specifically for China, we do have negative TCs. We might have this tightness in scrap availability as well. And China's general move to involution, trying to limit overcapacity, which there is with copper smelting, may see a little bit of production come back as well. But on the whole, we do expect the market, as I've said, to be in a surplus for this year and for next year as well, with robust demand supporting copper prices.
Natalie, thank you so much for being here with us today and for all your wonderful insight. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.